Danielle Shay, VP of Options, as promised at Simpler Trading, back with us on a Thursday to discuss a very busy earnings season. Ms. Shay, where would you like to begin? Because, wow, what a week it has been. Let's, I guess go right to Meta, because that was the latest and greatest out after market last night. Give me your thoughts here, first of all, on the report itself. I mean, it was okay. It was fine. Nothing, glamorous about it. But here we are, 18% higher today.
This one was really a big pain for me because I was calling this one to the short side. I did short it. I didn't lose too much money because I did it in a risk-defined way, but I'm not a big fan of this move today. I mean, overall, Facebook, I think the report, it really wasn't even that good, which I think is the weirdest part about it being up so much. I mean, that can definitely happen on earnings sometimes. This is one of those cases for me, since I went into it short and I've been shorting the stock for a while. What I'm looking at is the fact that, yes, it's up, but it rallied directly into resistance. And if even a stock like Tesla can't hold a rally post earnings on an amazing report, I'm still thinking that I'm going to get another opportunity to short it in the next couple days here.
When it comes to that idea, we've had a lot of people kind of on that same page. When it comes to that idea, are we waiting for some sign of, or some sort of sign, I guess is the best way to put it, before, putting on a short side trade? Or do you just try to maybe find a top at some point?
So generally what I do is I just combine key areas of resistance and key psychological targets, like, 200, 205, those are nice round numbers. So I try to overlap some key resistance with those targets. And then I really wait until it starts going in that direction. If it's still going higher, obviously I'm not going to try to jump in front of it. But when the momentum starts to roll over, that's a moment in time where I would start to get in. And I don't know, could be today, probably not based on the short squeeze today, but maybe sometime next week can jump back in on this one to the downside.
Yeah, back to, right now, session highs essentially for the S&P as we sit here. Okay, big ones tonight. Apple, Amazon, after the close tonight. How are you playing them?
So when you look at Apple and Amazon, we are seeing a big impact on the NASDAQ right now based on Meta's report, but Apple and Amazon are even more important. You've got Apple as the #1 weighted ticker in the NASDAQ. So what this does is really going to make or break this short squeeze here. It could, if we have a fantastic report, yes, we could continue to see a massive short squeeze until all the short sellers get out. Both of these, honestly, I don't feel strongly bullish or bearish about either one. I'm a little bit more neutral on each, just because I feel like, there's been a lot of headwinds this quarter. I would not be surprised if, inflation's an issue, transportation costs are issues. You've got China, that's going to impact Apple as well. So when I'm looking at both of these stocks, I'm leaning more to the bearish side, but not enough to short them. So I just want to wait until tomorrow. And then if we get a great move, I'll trade a short squeeze higher. And if not, I'm going to continue shorting to the downside if the reports aren't very good.
It seems like, we're getting to a point maybe in the overall market where, a okay report is enough to, do what we've seen today. As we had on our board there earlier, even Pinterest up 12% at this point as we sit here this afternoon. Let's go to the other end of the spectrum now. TDOC. There aren't enough words to describe what has happened to TDOC from the highs that we saw going into the end of last year to, what was it, $31, $32 this morning got touched?
So, I did short that one in the options market, and I did come out really well on the right side of that one. And so, between that and Facebook, I guess it's all right for today. But, with this one in particular, the pattern that traders have to look at, and I would say the difference between Facebook and TDOC is that TDOC's not making money, Facebook, yes, it was in a downtrend. People hate Facebook, whatever. But the reason why, TDOC and a lot of the other more recent IPOs that are coming up could have moves like this is because so many people got into these stocks when, we were thinking, oh, the growth could be great. Maybe they're going to be the next best thing. And way too many people bought in at these highs. And so as earnings come out and it becomes very clear that, hey, guess what? They still suck. that's when they're dropping. So Robinhood's actually one that I'm looking at for today. I don't know if I'm going to short it. I haven't really decided yet or not. But again, it's another company that people were kind of piling into at the highs. You've got 3 quarters in a row of bad results. You know, they're losing money. They're probably still going to be losing money. And I would have to bet after the market action the last 3 months that there's less people getting into the market. So we'll see what happens with that one today.
There's been a little more focus and a little more attention this week, specifically kind of back on some of the pandemic stocks, if you want to talk about them that way. TDOC, one of those. I mean, pick one. Zoom, there's, even Spotify, if you go that far, all down just unbelievable amounts from the highs. I mean, you put out an interesting tweet this morning that I saw that poll that you had on Twitter went in one direction very quickly about TDOC and whether or not it was a buy at some point. Is there something in that kind of group in general that you can kind of pull out and say, maybe it's time?
I honestly don't think it's time to buy any of those COVID stocks yet. I mean, I know people have been coming in and, funds like came in and they tried to buy Netflix and then it tanked again. I mean, I personally just don't see it yet. I think that all of the COVID stocks just have a really unique problem in which so many people came in and bought them at the highs. And because they're down so much, they're losing money. And so it's just one of those things where until everybody who's willing to bail has bailed, it can't go higher. And with the downtrends, I mean, I'm a trend follower. So I'm going to follow these trends to the downside. And on a day like today, especially when the market's rallying like this, it's gotten to the point where it's been really hard to even short any of these COVID names because they're on the lows. But if we get this short squeeze rally for a couple of days, I mean, we'll be primed, set up to short them into May. But I don't know when we could buy them, but it's just not yet.
All right, let's go to Twitter here. The Elon and Twitter saga continuing. There's more and more kind of what ifs, it seems, lingering in the background to indicate that there might be some justified negativity around what could happen potentially before this deal does get done officially. I mean, we've had a lot of questions as to, is there a trade here, towards that 54.20? And if so, how exactly can you structure something when you really don't have a, full understanding of what could happen potentially?
You just control your risk. I mean, a lot of people have been asking me about this because they want to know, why isn't it trading at 54.20? And I mean, for me, when I look at the stock, it's just because of all the negativity, right? I mean, I'm a huge Elon fan. I'm very confident the deal is going to go through. So I'm not really concerned about, the noise. There's always going to be people that like to tear him down and say, oh, he did this or he did that, or he doesn't have the money or whatever else. But I mean, as long as it goes through, it will go to 54.20. So it's one of those things where if you think it's going to go through, you can just buy the stock. And then when it gets bought out, you get your 54.20 a share. Now, of course, if it falls through, it's another situation. But that's where you have to just control your risk and decide which side of it you're on. But I think it goes through. Now,
from the other side of the conversation here, Tesla under pressure again today. I mean, a bit of a bounce here, obviously, late in the day. But, I mean, what a fall we had the past couple of days now for Tesla shares. Is there, from an option standpoint, a short opportunity there?
Just as a general rule, I never short Tesla because I love it. And it's one of my favorite stocks. If you really wanted to do it, it does have a technical setup right now. Usually if I'm going to short something, I look at the daily chart and I look at the 200 simple. And whenever you have a ticker that kind of falls off of the 200 simple, that's usually a really good flush point. Now, looking at Tesla, it's sitting just below that price point. That price point would be at $900. So if you really wanted to short it, you could sell call credit spreads at the $900 strike price. For me, I don't short Tesla because when you look at Tesla, Tesla is typically one of the first stocks to rally hard when the market does rally hard. I know it's been a little bit soft, based on the Twitter news and everything else, but that's why I generally just don't get in front of that train.
And it's not something that, we really have a full understanding, I think, of yet as far as the relationship between Tesla and this Twitter and Elon deal. Before we let you go, let's just a general overview here. You know, we're now through the biggest part of this earnings season. As far as the market's concerned, I mean, we've bounced a couple days in a row here now, but pretty important levels to deal with on both the S&P and NASDAQ.
So, you know, looking at the overall market, I mean, I think that the worst part about this earnings season is that even though we've had a couple different stocks that have rallied on earnings, you know, take Microsoft, for example, even though they have rallied slightly, they're still under so much key resistance. And I mean, the little blips that we're seeing on earnings, I mean, it's not going to correct the overall downtrend. So in order for us to actually turn and go in the other direction, I mean, it would have to be something a lot more substantial than this earnings season. And when you're looking at, you know, going into next week, we've got the Fed, we have May seasonality that's normally to the downside. So, I mean, short squeezes are fun and you can definitely trade it to the upside. Whenever I'm looking at a short squeeze, you know, I'm typically looking at NVIDIA or AMD or Microsoft or Tesla or just trading the Qs, but just don't, you know, get tricked into thinking that the low is in, because the market overall is very weak. And once we get through this season, especially into next week and the week after that, that's when we have all the more, you know, volatile stocks reporting earnings. You have all the recent IPOs. And I mean, I don't think that's going to go very well. So just, you know, take it one day at a time. I personally stick with the longer term trends. But I think there's going to be a lot of action next week, especially probably to the downside.
And as you said, more macro concerns as well, with a half-point hike, it would appear, coming with the Fed next week. In fact, Danielle Shay, VP of Options at Simpler Trading. Thank you as always. Best of luck with Apple and Amazon tonight.